Hello, everybody. I kind of actually want to start it off with Facebook today because I made a point whenever Facebook was breaking out here to a lot of people that, yes, Facebook on a fundamental and technical basis in this market after that gap up following earnings is definitely a high quality leader, but it is not what I would consider a monster stock candidate because its previous uptrend isn't large enough over the past year for me to even consider it as a possible new monster stock. And also the biggest problem is that all the noise in this base. So a good basing pattern is not like in August, even though the right side is a little bit better, but not really because you got distribution. This is more of a better basing pattern back here in May. As you can see it consolidate here, you can see volume is mainly below average. You get an accumulation bar in the middle, accumulation bar on the right side, and a breakout. Now, everything was working well for Facebook, unfortunately, until the market got rough in August. But this time around, volume was well above average the entire way with clear distribution leading the whole way through. I know the volume here at the low was good at the 200-day moving average, and here with the reversal, you got overall pretty decent accumulation at those very, very lows. But still, it started off with distribution, and we had distribution right before the gap up day. So I said that, the odds of this breakout failing are very high, and the first indication started today because Facebook didn't just pull back on below average volume or average volume. It reversed off its intraday highs, churned, if you will, on very heavy volume. So that's the kind of action I was talking about. Now, it doesn't mean that Facebook can't consolidate sideways here, break out again. It just meant that if you thought that Facebook was going to run 20% after that breakout, you really don't know your history of the stock market because we've seen this pattern before and it never turns out well. Normally, if anything, it's going to turn out like it did in October. You're going to get a rally for a while and then you're just going to peter out and die. And that's what most stocks are going to do. So now getting back to the market today. Today was a technical distribution day. Heavy one, too. Volume was above average on the NASDAQ. And if you look over here at the New York Stock Exchange, volume was above average also. Pretty much selling across the board. Russell 2000 almost gave back all of its Friday follow-through day. So the thing is, if we close below that follow-through day, low a day, 10003.52, I would consider that a failure, the follow-through day, and the market would be back in, under a correction mode, if I guess the way IBD does it. But for us, remember, despite the follow-through day, because we're below key once support, now resistance levels in October, November, December in the 50-200-day moving average, despite the follow-through day, we didn't have enough leadership to switch our models, and our models remain under an across-the-board sell signal. So there's nothing changing our models anytime soon. And then even worse off today, the absolute worst price action of the day, Dow Jones Transportation Average reversed the follow-through basically to the follow-through day yesterday with a big 2.94% sell-off on above average volume. That's not pretty at all. You don't want to see that. And now what we've had now are two clear distribution days hitting this tape since the initial rally attempt. Now, since the follow-through day, we were doing good the first day afterwards, but today is pretty bad. And 9439, as you can see, the New York Stock Exchange has closed below the lows a day of that follow-through day. So some more poor price action for all those that think that we're having a bottom. Like I said before, we don't have proper leadership. Our leaders are the utility stocks, and while they do look great, they look great, don't get me wrong, it's not necessarily where you're going to see, a whole lot of innovative new technology, companies. Oh, I got that one wrong. SCG, there we go. Southern, EDN I think is a weaker one, so that one's not working up. But overall, CMS, OGS, I believe. Yes, OGS. There's just a lot of utility stocks that are just running and running and running and running. And as long as utilities are leading and there's no other leadership out there, it's hard to think, once again, that this market's out of the woods anytime soon. And on that note, there were a couple of flag stocks. I flagged some young ones to look at. TRXC, it looks pretty nice. Sky continues in that consolidation pattern sideways. Does it a few more days, gets that 200 and 500 clearly moving up more towards the lows in the base. I'll be looking to set buy stops even on this one, despite how thin it is. I'll just have buy stop limits also and try to get what I can get, because this is a beautiful pattern, but it's not, the base isn't long enough yet for me to be interested in such a cheap stock in such a bad market. The most disappointing action today is OCLR decided to re-break out after shaking me out once again. Unfortunately, I got shaken out intraday back here because it undercut these lows. So then I went ahead and re-added off the 50-day moving average. I think it was right here. And I think ultimately my final cut loss was with a move below these lows, which was like, what, 319. So on this day, unfortunately, I think it cut them all with 318. I'm not sure. I'd have to go review my trades, but it all looks and sounds right. At least on this day, at the 11th, it would have. But I'm pretty sure on the 8th, it hit my final sell stop again on my re-add. And now, of course, it's breaking out. And then after hours tonight, I noticed, oh, great, it's an earnings winner. So now it's gapping up, holding its gains so far. So, it's one to watch in the morning to see if it could be a follow through on its gains. If it pulls back at all early in the morning, anywhere in the first half hour, you set buy stops above the high of the day. And if OCLR breaks out, pretty sure it's going to run. But once again, initially, I was long this stock. I think back here, this is the day that I got long. And if it wouldn't be for such a volatile market, we would now have over a 25% gain in the position. So this tape, and it's just rough. It's rough. It's rough. It shakes you out. I think the first time I got shaken out was because of this. Undercut this low a day. Tight stops, but, I figured OCLR was going to break out by then. I undercut it by a penny or two, worked its way higher. Then it gave me, a get back in signal, then faked me out again, and then it gave me this signal to get back in. I was like, yeah, right, I'm not falling for it. Of course not. And then, of course, it fails, and I'm like, oh, that was a wise decision. Then I got this signal. I was like, I'm not falling for it. And by this day, I was like, oh, that's a wise decision. And then today, I'm like, damn it. And then after hours, it's gapping up. So what are you going to do? But before I go and actually show the new long, I was curious what's happening after hours in Yahoo. Ugly, ugly, ugly. And Guild was the other one. Not too good either. So, not a whole lot of great action after hours so far. So that leads us to our one new long position. Actually, really quick before I get there, clerical items, CHUY is a 100% end of day sell now. I was completely knocked out of the entire stock on this day with my sell stops. But on an end of day basis, it's now a full sell in the morning. And then OUT, not shown on the chart, the 20-day moving average, it's closing below it, above average volume. So you can either, what I'm still going to do is half my sell stop will be below 2102. More than likely, I have my final sell stop back here because it's such a tiny position. I have no idea, but I think it's like right around 100 shares. That sounds right. 100 shares. It's straight up even. So I have 100 shares of OUT. So I'll sell 50 with a move below 2102, and for now it'll be a move below 1970. However, if it confirms the sell-off of OUT today with another above average volume close down tomorrow, and if it's still above these lows, 2060. Probably 2027, I will move my final sell stop to 2027. This seems to be an outlier day, and I'm not sure I want to keep using that as the low day if it fails one more time. But for now, OUT isn't done yet. But if it closes below this low for a fact, there's no doubt that I'm moving my final sell stop up a bit. But it's such a minor amount, and it's just not costly, even if I just let it wait to go down here with 50 shares with the size of my account. It's not a big deal. So that leads us to our one new long signal, IDA, utility stock. It's a utility leader. I liked it a lot, but for some odd reason, it's not chugging along as much as the others, but it's clearly under accumulation. I looked at the time in sales today and yesterday, and of course the day before I did not, but the volume, but I didn't look at it on the third day. But 3 straight days of clear accumulation. Looks good to break out. Earnings aren't until the 18th, so I figure it's Cansom quality stock, 1% for being Cansom quality. It was confirmed in my price volume BOP scan. If it wasn't confirmed in that scan, probably still would have taken it. But, it's not great, it's not beautiful, but utilities are hot. They look like they have more room to go. There's already a lot of stocks breaking out and leading, and while IDA might be lagging, it's still higher quality. It's technically, like I said, a Cansom quality stock, so I don't feel like it's lagging badly enough that it's going to fail terribly. If it does, first sell stop is below this low a day, 68.87. Final sell stop is with a close below or a move below the 50-day moving average.